Yahoo has gone from a failed growth stock to a value investor darling. Shares hitting a 52-week high today before pulling back at the end of the trading session. Now, last week we learned that David Einhorn, looking beyond the trading in the stock, David Einhorn of Greenlight Capital, saw some real value in Yahoo's Alibaba holding in Asia. Now, just a year ago, the stock sat at under $13 a share. Now it's up over 18. Another investor on the Yahoo bandwagon, David Siminoff of Thompson Peak, my bad. I see the bandwagon. You've been associated with Yahoo. Your wife was one of the early Yahoo-ligans.
Yes.
But you like the stock in a very different way here.
I do. You know, it's amazing how things change in Silicon Valley and how violently they change. 10 years ago, if I told you Yahoo would be in the position it is today, trading at 1 or 2 times EBITDA, maybe, you know, you'd have said I should go back to...
EBITDA is a banned word in our show, but operating profits.
Operating profits.
Which explains how profitable a company is, and that's the thing before taxes and all the other garbage.
Exactly. And, you know, the Yahoo missed Facebook and Google, a number of other acquisitions it definitely should have done, but it nailed China. And they have been a big force there. Jerry is a rock star in Taiwan and China and so on.
Jerry Yang, one of the founders of Yahoo, yeah.
And so they have done that very, very well. And the assets that they have off balance sheet, I think, are worth as much, maybe more, than the whole company is a year from now, if you believe the growth that's coming in China and Japan off these
Now,
stocks.
as a hedge fund manager in Silicon Valley, does it help to have that kind of perspective? Do you feel like that's one of the things you're able to add, knowing where companies came from, to understand what they've got under the hood?
It does. You know, relative to most of the guys doing deals in the Valley, I'm a grandfather. I've been around a long time.
At the age of 25, that's amazing.
Yeah, exactly. I just look terrible because I manage money for a living. But, you know, it is rife with history now. A lot of changes have gone on, and it's funny, you know, the more things change, the more they stay the same. There are, I guarantee you, some teenagers in a garage somewhere in Palo Alto doing something that's going to harm Google someday in a very bad way, and we have no idea who those are, but in 10 years they'll be out and doing their thing.
And yet, when you're looking at your portfolio, the opposite of that, another holding of yours of interest, Comcast. I'm very interested in what you see in Comcast that isn't widely known.
Sure. So we're opportunistic, and we'll go anywhere we can make money for our shareholders. Comcast got hit from a number of directions. One was the NBC deal, which Wall Street hated, and they sold the stock down. Another was anemic subscriber growth numbers at Comcast. But physics don't change over time, and the competitive offering of internet access that Comcast has relative to satellite or any of the other competitors is so compelling. I just thought the stock shouldn't trade at 4.5 times operating profit.
Thank you for not saying EBITDA.
I won't say EBITDA. You know, we've owned it now $12 ago, so it's been a very nice stock, and we've done almost nothing with it, just sitting, watching it go up little by little. And they have enormous assets and tremendous free cash flow coming. I'm sensitive to cash profits.
When you look at the company, do you look at it as a tech company, as a media company? I mean, what is sort of the edge you bring to that name?
Well, it really is a little bit of everything, and we only do TMT, Technology, Media, Telecommunications, at Thompson Peak, and so we cross a number of areas. I don't know what kind of company Comcast is. It's a little bit of each is probably the right answer, and the strategic position they're in right now is amazingly powerful, and it's an exciting company that shouldn't trade at a lower multiple than Ford.
Well, it's fun to look at these companies, know the companies, and see what the stock's going to follow, what they're doing. Really glad to have you on. We'll talk more names in the near future. All right, Emily?